what is market geometry? So with regards to the Forex market, it refers to a trading style that uses geometric patterns to find an ideal setup. Okay, so it's very straightforward and simple. We have done 5 patterns already. So we have done the bat pattern, butterfly, crab, cipher, and Gartley. Finally, we're on the last pattern now, which is the shark pattern. One thing that I want to point out to everyone that I didn't really mention in the previous sessions, just due to the fact that it wouldn't make much sense. But now, hopefully, if everybody has watched, plugged into the previous sessions, it will make a lot more sense now. So down at the bottom here on this bottom section, you'll see 2 parts to this, okay? You'll see the bullish part, and you'll see the bearish part. Let's just concentrate on the bullish one for now, just so it makes sense to everyone. So it's very straightforward and simple. So when we look at the bat pattern, when we're looking for that B point, essentially what this is saying is it will retrace the 50% of the Fibonacci tool, okay? So each one of these patterns, as you can see here, the butterfly is 786, the crab, cipher, Gartley, and shark can be 618, and again, bat, crab, cipher, and shark can be 382, right? So these essentially are the B retracement zones for each of these patterns. And the one thing you can keep in mind with each of these, if this B point isn't met, you know, wherever this B point lands, essentially, will create the initial move or create the initial sort of outlay or outlook for these patterns, right? So let's say if I was to quiz someone in the chat, so I'm going to open the floor straight away to everybody. If we have a very strong impulsive move, we place our Fibonacci retracement tool, and it is a bullish pattern, okay? That's not a trick. That I'm not trying to trick you by saying bullish or bearish. Again, the retracement zone will be the same. Once we've placed the Fibonacci retracement tool, for what percentage are we looking for the butterfly pattern point B to come to? Can anybody put that in the chat? What number are we looking for that retracement to come to? 786, perfect. Anybody else? 786, okay, no problem. That's fine. So that is correct, yeah, 786. That's the butterfly pattern, okay? So it's right here, right at this section here, 786, okay? If I was to throw out another pattern, let's say the shark pattern, which 2 zones are we looking for point B to retrace to? Which 2 numbers can we look for the shark pattern to begin forming on point B? $382. Yeah, so that's the shark pattern retracement. There's another number on there. If anybody can throw out that number, that would be amazing. So that number is 618, okay, right here. So you can have the shark pattern on this retracement percentage, 628. So 618, yeah, that's correct. But the thing that I'm trying to point out here is that the reason why I didn't mention it in the previous sessions, again, because it would make absolutely no sense. But when you come into the market and you've placed your Fibonacci tool on one of the impulsive moves, any impulsive move for that matter, when you're looking for the retracement, you've already have your percentages in place. You already have the 50% there. You already have the 786, 618, and the 382. You already have them there. You're just waiting for that retracement to then react to one of those levels. And once you get that reaction, you can then quickly identify which pattern it's going to be. So if you've been in my previous sessions, what I'm trying to say is if you've taken note of the B retracement percentages, okay? Because they're zones, right? It's not just this in particular percentage, it's a zone. Although this might be the final percentage that it can go up to, it's not necessarily, locked into this percentage. It can be a zone. So what I'm trying to say is, if I see price pattern, bounce off of 50%, I know that it can be a battle pattern forming. If it bounces off of 786%, I know that it could be a butterfly pattern forming. Okay, so this is one thing, this is one little trick that everybody can use, right? So I'm hoping that throughout the sessions and throughout the last couple of weeks that we've all been placing the Fibonacci tool on the impulsive move. Now our next step in our development, our learning for market geometry, is what percentage is this B point forming? Is it reacting to? What percentage is it? What are we looking for? If it's 50%, we're looking for the bat pattern. If it's 786, we're looking for the butterfly pattern to form. Okay, so this is our development. That's the next step that I want to get everybody on. So it's very easy, it's very straightforward. You just got to practice it. Okay, practice makes perfect. Every time you look at these charts, you'll see patterns forming, and if you don't, you definitely need to go back to the sessions and watch them again. So today's session, we're going to be going through the shark pattern. Okay, so we're going to kick this off by going into the. I'm glad that the slide did not change. Actually, I'm going to throw out a question. When we're looking for our pattern, what is the first move we're looking for? What are the first characteristics that we're looking for before placing our Fibonacci tool? The first movement, can anybody throw that out there in the chat? X to A. What's the characteristic that we're looking for X to A? Is there any particular move that we're looking for? So impulsive move, perfect. So we're looking for a very strong impulsive move, okay? So this pattern right here is a bearish shark pattern, okay? So what we're looking for when we start off is a strong impulsive move. Always, 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 always. When we're looking at the charts, the easiest thing about this pattern that makes up 50 to 60% of the work that you've got to put into finding these patterns is just placing it on a really, really strong impulsive move. That could be, if I was to throw one example out there, it could be it could be a news candle. It could be a news candle, not just one news candle, but of course it'd have to be like a sort of like a follow-on from a bullish pattern or a bearish pattern. That's a strong move, right? Because essentially what is happening is price is moving in a matter of seconds, in a matter of minutes. It's moving in one direction. It's not consolidating. It's it's an impulsive move. It's trending up or down. Okay. So after we found this move, what are we doing? What tool are we going to be placing once we've found that price action that we want? So let's go in the chart. I'm going to do something different this week. Let's just go into, I'm just going to quickly save that. Let's go into any random chart. Right. Can anybody find here an impulsive move? So just pop in the chat if you found an impulsive move, and you can sort of direct me on which day it's on. We've got Tuesday, 2 a.m., 7 p.m. I think that is. You've even got a bearish impulsive move here. So can everybody see what I'm looking at here when I'm looking for an impulsive move? So we're not looking for this, right? We're not looking for this sort of movement. I'm just going to highlight this. We're not looking for this movement here. This is consolidation, right? This is one zone. It's going sideways, okay? This is going sideways, right? We want something that's doing this. We want something that's got a bit of movement. So it's, you know, it's an impulsive move. It's either moving in an upward direction or a downward direction. So in this instance on the left, it's moving down, right? In this instance on the right, it's moving up, okay? So it's moving in an upwards direction. So so let me take these 2 points away. So coming back to my question, what tool are we placing on our impulsive move? If anybody could pop that in the chat, that'd be great. Does anybody recall Fibonacci? The Fibonacci, perfect, the fib. Perfect, right, so if we're looking at a bullish move, which direction are we placing it? So are we placing it from low to high, high to low? Where are we starting this? Where's the X to A? So we're looking at a bullish move, an upward trend. Okay, perfect. So we start low. That's the right answer. We start low, come to high. Okay. So it's 100% to 0%. So that's the movement. Okay. That's good. Perfect. Now I'm going to go back to the slides. I think that's a really good way to do this. So we found our impulsive move. In this case, it's a bearish shark pattern, and we're placing it from high to low, okay, because it's a bearish move. And perfect. The next thing we want to do is we want to look for point B, okay? And as I mentioned in the start of the call, there's a retracement percentage for each pattern, okay? In this instance, we want price to retrace between 38.2% and 61.8%, okay? And that's of the XA move, right? So XA being 100%, okay? So again, if I was to do a quick demonstration of 100%, so let's find a bearish move. So let me just delete this. So a bearish move can be any of these two. So 100% to 0% there. Right, so let us do this. Let's pretend that this line equates to 100%. I'm going to change the color so everybody can see it a lot better as well. I'm going to zoom into this so everybody can see this a lot better. So can everybody see this line? I'm going to change the color. If anybody could pop a yes in the chat, that'd be great. So let's do blue. I think blue would be better. Yeah, perfect. Good. So this line represents 100%, okay? Let's pretend that this box is the retracement. Okay, so now let's go back to this. So we've placed our fib from high to low, 100% to 0%. We're waiting for this retracement to come to 38.2, between 38.2 to 61.8, okay? So there's 38.2 here, and it's just about retraced to that point between this zone, right? 61.8, 38.2. So if I come to this and I show you, so let's do this. So this is right here. I'm going to place it right on the percentage. And I'm going to bring this in a little bit so everybody can see. There you go. Right. So can anybody tell me what percentage this green zone is of 100% of this a blue line? Can anybody tell me what the green zone is? What percentage of the green zone is of the blue line? Can anybody pop that in the chat? What percentage of this green zone equates to the blue line? So if the blue line is 100%, 38.2. Amazing. Yeah, so you got it right. 38.2%. So right here. So of this 100% of this 100% of this blue line, we're retracing 38.2%. Okay. So it's very simple to understand. So for B, we're looking for it to retrace between that zone, between those two percentages. So between 38.2% and 61.8%, okay, of the XA move, remember. Now we are going to look for point C, okay. Now point C is following on from point B. This time it's not a retracement. This time it's an expansion, okay. And again, we went through the 3 different times of types of Fibonacci. So there's a retracement, there's expansion, and there's extension. Okay. Now we're looking for the extension to be between 113.1% and 161.8%. Okay. So 113. So I need to alter that actually. So it's retraced between these two zones. This needs to be altered. It says 111, but ignore that percentage. It needs to be 113.1%. Okay. So as you can see here, C is retraced or expanded to this zone. Okay. So I'm going to quickly give everyone. Actually, I'm not going to do that because it doesn't make sense to do that. I might, however, show you how to change your Fibonacci to recognize an expansion. Okay, so if you go into the settings, so if you click on your Fibonacci on Trading View, you go into this cog, this wheel here, it says settings, and then we go down to the bottom here. An easy way that I do this, you can do it the traditional way, but I usually just click this button right here and it reverses it, right? Because what you're looking for is the C move, which instead of going, retracing up this upward, it will, come down for this move. So the zone being, I'm going to correct that quickly while we're here. So it's 100. Yeah. Perfect. So it wasn't miles off. So I'm going to draw up the zone as well. So the zone is right here. It's this point right here. And if you want to do it the traditional way, instead of clicking on the Fibonacci, going to your settings and reversing this, if you want to do it the traditional way, the best way to do it for an expansion is to, so I just need to get rid of this one. Is to place the Fibonacci from low, or from high, sorry. That's the wrong tool. From high. So we're looking here, the trend-based fib extension, okay? So from high to low and back to high. And then there you go. You can see here that the percentages are there. The only difference being you'd have to adjust the percentages on this point as well. So we're doing 0.131. Okay, perfect. So that's there. So that's this point right here. The percentage is not placed correctly. Just adjust that. Okay, perfect. So you see that's the same. Can we put in the chat if we just recognized what I did? So my way, can everybody recognize my way compared to the traditional way of finding the extension? Yes. Okay. So the difference being with my way, I'm just using the normal retracement tool, but I'm reversing it. With the traditional way, you're selecting the extension tool, but the difference being you're placing from high to low and back to the high. Okay. Yeah, of course I can do that again. That's not a problem. Let me just do that again. Perfect. So this is the Fibonacci retracement tool. So from high to low. And then what we're doing is we are going to our settings tool, or settings, coming down to the bottom, clicking reverse, and that creates the, essentially creates the expansion, okay? I'm going to get rid of that now. I'm going to do it the traditional way. We go to the trend-based fib extension. I don't use this, but you know, if you want to do it the traditional way, you can do so. Again, what we're doing is we're placing from high to low, but then we're coming back to the high placement, the original high placement. So right there, but you sometimes have to adjust this. Perfect. And again, that creates the expansion as well. That's not a problem. Perfect. So let's go back to the slides. Perfect. So those are the percentages that we're looking for the C point to extend to, okay, to expand to. Without these two confirmations, the pattern is invalid, okay? Without C falling between these percentages and without B falling between the percentages that was stated, let me go back. Between these two percentages, 38.2 and 61.8, B would be invalid if it went outside of this zone, okay? So just think of it as zones. The next point we're looking for is the retracement, the D point retracement, okay? So it should retrace between 88.6% and 113.1% of the Fibonacci X to C placement, okay? So that's the original, actually that's not the original. The original was X to A, but instead of placing it from X to A, we are placing it from X all the way down to C here, C point, okay? And then we're wanting price to retrace to this point here between these 88.6%, as you can see here, just about did that, and 113.1%, okay? So that's this here again. Don't pay too much attention to this number. It's incorrect. It's this number that you want to be looking at here, okay? So now after this point, I'm just going to turn off that. Stop making too much noise. So then after this, we are then looking for another expansion, okay? So same concept of the placement. However, we are placing it from B to C, okay? And again, same concept of it being, actually, the same concept of it being 100%, the retracement percentage, what am I trying to say here? So I'm just going to reference this again. It's the same concept of this blue line, okay, with any retracement. So the blue line being 100%, and again, these zones, the retracement zones, being the percentage of that 100%. So I believe it was 38.2%, okay, this zone. So yeah, and going back to the expansion. So there's two parts to point D. This is the first part, okay? So you're looking for the expansion. Where is it? So the retracement, and now you're looking for an expansion, okay? So what we're doing is we're placing the expansion tool from B to C and then back to B again. But again, if you're using the retracement tool, you only need to place it from B to C and hit reverse on the settings tool, okay? And then what we're looking for price to fall between 161.8%, so right here, and 224% right there, okay? So price did almost between, exactly in between both of them. And then the pattern has formed. Once the pattern has formed, or to complete this pattern, guys, if someone could put in the chat what we do next. So actually not what we do next, but what are we looking for in the completion of this pattern? Can anybody put that in the chat, what we are looking for with regards to, I'm going to give a hint as well, with regards to candles. So what are we looking for in a candle? What particular candle are we looking for? What movement? Is there anything in particular that we're looking for the candle to do within this zone? Anybody pop that in the chat? So I'm going to give an example. With the trade ideas sent out to our group, there's a few things that we're looking for to enter these trades. So we're either looking for price to bounce and reject off of a zone, or we're looking for a break and retest. When we're looking for a break and retest, what are we looking for a specific candle to do? What must the candle do in order to break that percentage, that level? Close, exactly. So in this instance, we are not looking for a candle to close above 224%, which is right here, okay? We don't want the candle to close outside of this point, and we don't want it to close outside. We want it to close on the inside of this point, okay? Once that happens, now we can enter the trade, okay? So at that point, we can then enter the trade. So if nobody got a chance to, if anybody didn't get a chance to write down those percentages, you can do so. Or again, the video will be uploaded to Pipcatcher, so you can catch it on there later on. We can then enter the trade, right? So entry at point D, stop loss below point X, and then your take profits being point A and point C, okay? Another question for everyone. Let's say, for example, price goes in our direction and we reach point A. So price has reached point A, but we haven't set point A as our take profit. We set point C as our take profit. What are we doing to modify our trade? How are we going to modify our trade at that point? This has nothing to do with market geometry. This has everything to do with risk management and just overall managing your trades. Can anybody pop that in the chat? So just to give you a clear sort of question. We've placed our take profit at point 2, take profit 2. Price reaches take profit 1. What are we then doing once price reaches take profit 1? Can anybody pop that in the chat? Yeah, so we can take partials. There's something else that we have to do in order to protect what we've just done, okay? In order to protect the money that we've made, move our stop loss to break even, correct? So we're moving the stop loss from point X, from below point X, we're moving it to break even. Or what you could do is, so I do this most of the time. What I would do is move it to break even if price is looks like it's going, strongly in that direction, I would then just push my stop loss further into profit. So I know I'm not going to, so I lock in a certain amount of money. Okay. Then I don't have to worry about the trade. Then I can just leave the trade to do whatever it wants to do, and I'm not too fussed. If in that trade I've hit my 3% for the day, I definitely will be moving my stop loss, closer to take profit one. And then, if it does turn around and hit your stop loss, then it's fine. It's not too bad. Okay, perfect. That's fine. Does anybody have any questions? Is anybody struggling with anything in particular that I can go over again? Because this is obviously the last pattern that we're going to be working on with regards to harmonic patterns. Next week, I'm going to be moving on to the alternative patterns. But if anybody is struggling on these patterns now, if they have any questions while I'm on the call now, please feel free to put them in the chat. If there's anything in particular that you're struggling with, just pop it down in the chat and I'll be more than happy to go through that in today's session. So we're going to move into a live demonstration now. So let me just bring that up. Euro USD. Perfect. So for time purposes, what I've done is I've just found a shark pattern. Again, it's a similar shark pattern. It is a bearish pattern. So I want everybody to sort of interact with the pattern now. So where am I placing my, first of all, what are we looking for to start off with? And then where am I placing my Fibonacci tool? So if anybody could pop that in the chat, that'd be great. So when you're starting off, so just to give everyone a hint, when you're starting off to look for a pattern, essentially all you're doing is placing the Fibonacci tool on a very strong impulsive move. So what you want to look for is a strong impulsive move, okay? So you're looking for the highs and the lows of the market. It could be any of these highs and lows, right? It could even be this pattern here, or this impulsive move here. You're not always going to find a pattern in the market structure. You're not always going to find a pattern, but what you are going to do is you're going to get used to the reaction points. Okay, you're going to get used to the reaction points, and that's what you want. You want to notice what happens at certain percentages. You want to become accustomed with, let's do this low to high. Let's see a reaction point. This is retraced quite deep, right? It's a deep retracement. And what does a deep retracement mean? Can anybody throw in the chat what a deep retracement calls for? What is followed up from a deep retracement? Because we're taking it back to the basics, essentially. You just keep it straightforward and simple. Don't complicate anything. You don't need to complicate it. So essentially what we're looking at, if we're going from low to high, and a deep retracement, what that means is it calls for a follow-on of a weak continuation, okay? If price, so if you look at this retracement here, it's fallen almost back to, the beginning here, but you have a reaction point here at 23.6%. and there's a weak continuation, right? And it just drops off. So let's take another example. By the way, these points here I haven't looked at before, so we're looking at these brand new together. Okay, so let's try and find a trend, like an upward trend. Let me go on to the hour. Let's take, for example, because we're on EURUSD, it's been in a downward trend for quite a while, actually. You can see here. You can see this point here. So let me just delete all of this. You can see here, look how long EURUSD has been falling for. So when we're going from looking at a bearish trend, we're going from high to low. So this isn't going to be perfect. Now, let me just change that back because it's reversed. I think it's reversed. Yeah, it's reversed. So we've gone from high to low because we're looking at a bearish move. And look at these retracement zones. So if I was to, so for example, if I was to place just the tool, let's say, let's pick a high, another high and low. Let's pick this point here. So this is a high, this point here, and this is a low, right? So let's pick that. Look what happened here. I haven't even like preempted this pattern or this reaction. So look at this. Price has retraced to 50%. 50% is gold for a reason. It just, look at this. Look how precise this is. This is why I personally believe everyone should be learning how this works. So if I adjust this to make it correct, like exact on the low, look at this. You could have got in at this point here. Obviously, again, you would set it at around a whole number, but look at that, and look what happens to this. It drops. How much does it drop? You could take the first 3 candles. That's 160 pips. You take the next couple of candles, if you're holding on to it, taking partials, 200 pips. It's very, very simple. There's literally no drawdown here as well. Let's say you entered at this 50% zone. Again, you're looking for a reaction, okay? So you might be thinking, why don't I sell here? You can sell there, there's no problem, but you're looking for that reaction, okay? You're looking for, like here, for example, a break in momentum. These 2 candles, if you have a look at these 2 candles, look how long the wicks are at the bottom. The wicks are that long at the bottom. It's because sellers are losing momentum. Sellers are losing momentum, and buyers are pushing price up. Again, you're looking for the exact same thing. You're looking for wicks that react the way you want them to react. Okay? What are we looking for? We're looking for an exhausted wick. So you can see here, there's actually 2 doing the opposite things. So this is what you would call a doji candle, okay? A doji candle just means that the market it doesn't know which direction it wants to go in, okay, the market. However, if you focus on this red candle that comes after it, what does this indicate to everyone? Can anybody put in the chat what this single red candle could indicate? Again, it's touched the one of the percentages as well, and we're looking for sells. Why are we looking for sells? Why are we looking for sells? Because of this. This is on the daily time frame as well, just so everybody knows. So we zoom in. So look at this trend right here. This trend. It's going all the way down. That's why we're looking for sells. So I'm just going to quickly control reversal. Yeah, exactly. We're looking for we're in a bearish market right now for Euro USD. We're going to be looking for the wicks at the top to be tall. That's what we're looking for. That's the indication for us to enter. It's insane. Look at the daily wick. The daily wick is, look at this. It's just ridiculous. Anyway, I digress. We just keep it simple. Don't complicate things. Look for the trend. Is it a downward trend? Is it an upward trend? If it's a downward trend, like this Euro USD, place the tool first. Okay. Make sure you're placing the tool from high to low. Okay, like this example, high to low. And then just watch price action, right? Let's say you're too slow. Well, not too slow. Let's say you're slow to react at this candle. There's other points where you could get into this. So let's say, let's take this for example. It came up to the 50% zone here, and then dropped again. Yeah, my advice to everyone, keep it simple. Look at your percentage zones and just look to get in at these percentage zones and look for indications to get in first and foremost. So let's go back to the pattern that we were going to focus on today, the shark pattern. Okay. So when we are starting out with our pattern, we're looking for the strong impulsive move. Okay. Once we found our strong impulsive move, again, on the 5-minute time zone, it's very difficult to pick them out. But once we've found the impulsive move, the bearish move, we're going to place from high to low. Can anybody quickly throw in the chat what percentage we're looking for point B to retrace to? So there's 2 percentages that we're looking for point B to retrace to. Can anybody throw that in the chat? Any particular percentages that we're looking for point B? So we're looking for 38.2% and 61.8%. So I'm going to draw up a zone here. So point B needs to retrace between these two zones, between these 2 percentages. So that's the zone that we draw up. Okay. Now we're looking for point C to expand between 2 percentages. Can anybody throw in the chat what percentages they are? So I'm going to reverse this because we're looking for an expansion. Okay. So reverse. I'm going to quickly draw the zone. So it's 113.1%. And my bad, I just need to do this. So it's these 2 zones here. So I'm going to, so it's 161.8%. Yeah. So this right here, 113.1. So these 2 zones here. Again, if it goes out of these 2 percentages, the trade, the pattern isn't valid. Okay. Now for point D, Now we're back to a retracement. What percentages are we looking for point D to retrace to? Again, this is why I tell people to take notes at the beginning. So then you're prepared for the end of the session. So you know which percentages you're looking for, okay? So can anybody throw a percentage in the chat of where point D should retrace to? So the percentage will be 88.6. Yeah. And can anybody say the second percentage? Does anybody remember? Just going to move this on with. So it's quite a big zone. Is that correct? So we're looking for the retracement, 113. So it's not that, it's this zone here. So 113.1%. Okay. So that's the zone that we're looking for the retracement. And then for the extension, can anybody tell me where we are placing the fib tool for the extension? Can anybody put that in the chat? So I'm going to change that quickly so we can get the extension. So it's from B to C. Just going to bring that up. From B to C, we're looking for the expansion, B to C, okay? So we're going to take the expansion B to C, and we're going to flip that around. So we just need to flip this around. Perfect. And then the zone is 161.8% and 224%. So this is the zone. Have a look. So I need to adjust that. Okay, so from here to here, that's another criteria that can be met as well. So perfect. So once this pattern is formed, where are we placing our where are we entering from, and where are we placing our stop loss and take profits? Can anybody pop that down in the chat? I'm going to clear it a little bit so everybody can see it quite easily. So where we'll be placing our, where first of all are we entering, and then where are we going to be placing our stop loss and our take profits? And again, if anybody can put in the chat what this candle essentially indicates, this green candle right here, what does that indicate to you? So to me, what that indicates is a loss of buyer's momentum. Exactly. It's a loss of buyer's momentum, which means that the sellers are trying to take control of this market. So our stop loss will go above X right here. We enter at D, and our take profits are at A and C, okay? Perfect. Well, I appreciate everybody for joining the session today. Next session, we're going to be going through the alternate patterns. And then I can also go through some Manara, the Manara scanner with everybody. What we can do is we can look at some higher time frame patterns. And we can look at some of the favorite patterns, but we can look at also butterfly and Gartley. These are the main patterns that I want to look at with you guys. And what we can do is we can start looking at some trade ideas also. So yeah, I'm looking forward to doing that with everybody, to, looking at some trade ideas, coming on to Manara and looking at, where we can potentially enter. And if the trade is a good trade or a bad trade. There's plenty of trades on here to be had, to take, but we just need to know what indicators we're looking for and how to enter, etc. So I appreciate everybody for joining the call today. If you all got some value from the call, if you could put some fire in the chat, that would be amazing. Put some fire emojis in the chat, that would be great. And yeah, I look forward to seeing everybody in the next session. Remember, it is a recorded session. I can upload it to our the Pip Catchers YouTube channel. If you need to rewatch these, I do recommend watching or rewatching the different types of Fibonacci placements. So retracement, expansion, extension. That will make a lot more sense. I also did my first session on Elliott waves and Fibonacci as well. So if you want to watch that session, that would be, I believe that would be a lot beneficial to understanding how the patterns work and how to find these patterns. But yeah, guys, I appreciate you all for joining. And I hope you enjoy the rest of your week. I hope you have a really good week trading. And yeah, stay safe. Thank you, guys. Take care.